I've got Josh Brown next to me, and, you know, I remembered half an hour ago that it was about a month ago where I think you bought this stock. You owned it for a minute, but nonetheless, you looked at something for a moment, said, hey, I'm going to take a shot. And then when you saw things look like they were going to get bad, you're like, I'm out.
Yeah, I mean, this is playing with fire. And anyone that bought the stock at $1.70 was probably gambling, or they had inside information, because the fundamentals here are absent a deal. This thing was done. Once they get those downgrades, then you start talking about deposit flight. And you can't own the equity of a bank where there's a deposit flight underway. And for people that hadn't seen that happen in 08, 09, even into 2011, this was like a nice lesson for them. And for people who had seen that before, understand that. So there were people that I guess won today by buying, you know, $1.70, $2 prior to the halt. But I think what's good about this is that this is almost Buffett-esque. This is the former Treasury Secretary of the United States now involved. And not only that, he took stock. In addition, the most powerful hedge fund manager in the world, he's taking stock. In addition, Otting, who's going to be the new CEO, worked with Mnuchin at, I think, Bank West or One West. So there's a history here of these gentlemen working together at a commercial bank. This is not something where it's like just this, you know, let's throw a dart. I think the equity's okay. The longer-term ramifications of this, though, I think should not be left out of the conversation, which is we're now going to take a second, third, and fourth look at a lot of other regional banks and a lot of non-traditional lenders. And, of course, there's an idiosyncratic issue here, which is the rent-stabilized apartments that were so concentrated in New York Community Bank's books. Fine. There was also those idiosyncratic issues last spring with the venture capital concentration. But when you have so many banks that each have their own issue pile up, eventually it stops being a one-off situation, and it starts to be something where we start using the term systemic more. So I don't think we've gotten to that point, but it just reintroduces that fear back into the conversation after a full year since the last go-round.
Steve Leisman, on any other day, undoubtedly the Fed chair testifying on Capitol Hill and coming off more dovish than perhaps the markets had expected would be the obvious lead. But here we are talking about bank stability, and the irony is so was the Fed chair, because he was asked about it, not NYCB specifically, but this was unfolding as he was in his seat in the House today.
Yeah, and I think, as usual, Josh put his finger right on the issue, which is the extent to which this is systemic. And I have this formula that I use, Scott, if you're interested, which is that the systemic risk nature is a multiple of the amount of money in question multiplied by the opacity of the problem. And the question here becomes, do we know where the losses are? Do we believe that the regulators understand where they are? And are they addressing those with the banks? Powell tried to convey the idea that he does answer both of those in the affirmative, that they're working with the banks. He said it's more small and medium. I don't know if this has the potential to gross up to being a systemic risk issue. It does not appear to be residing in the larger banks that are out there. And to the extent that they are, I do know that some of the banks have taken reserves against those potential losses. So we have to watch it. And we have to also know, I think, Mnuchin, who we know to be a smart guy, what did he see in this bank that made it worth it for him to come in and take the equity? Was it a kind of benevolent bailout, or was there a profit motive in there that he sees it? And that could help out, by the way, other small and medium banks in there. I will mention one other thing, Scott, which I think is really interesting. I want to know if Josh wants to comment on this. One thing I've been impressed with is the ability of the market to distinguish between office commercial real estate problems and the other commercial real estate sectors that are out there, from the data centers to the shopping malls to the apartments. It does not appear as if all CRE is being treated by the market with the same kind of response, that they're saying, okay, this is an office problem, not a CRE wider problem.